Howdy,
Hey, I'm Amy.
I'm Paul. Nice to meet you.
You.
Yeah, I'll be moderating our discussion
Perfect.
today, so appreciate you joining us.
Try and get my screen.
Hi, Laura.
Hello, how's it going, Paul?
Yeah, very good. Good to see you again.
Good to see you.
I'm glad you changed your name. I was wondering who GCH was.
Yeah, I'm in one of the offices I work in. GCH is Garden City Harvest.
There you go.
Yeah.
Awesome. Hi, Dave.
Hello.
Hi, Alanna.
Hello.
I'm Paul Gladen. We'll be moderating
meet ya.
our discussion today. Yeah, thanks for joining us.
Terrific.
Is it just going to be the two of you from JCCS? Are you expecting anyone else?
There should be one more, Jake
Okay.
Carter.
Okay, great.
Good afternoon.
And will there be much discussion or questions on like the PPP loans and those sorts of things?
My guess is probably not, but I wouldn't rule it out. Jen Stevens with the Missouri SPDC, part of our Accelerate team, she'll be joining as well. We certainly handled a lot of those kind of questions over the last couple of months. But in some ways, the reason we started doing this sort of new format is in some ways, some of those questions have died down, and we want to sort of focus a little bit more on helping people, particularly often what we're seeing, sort of what I would term the micropreneur, sort of the really small
Right.
solo 2-3 employee businesses that often don't have ready access to some of the advice that they need, but also where a sort of sense is maybe they're not always as on top of some of their financial situation as they kind of ideally should be to at least try to answer some of those questions. So
Okay.
hey, Nick, good to see you.
You too. How you doing?
Great. We'll give it another minute or two as a couple more people, at least from our panel perspective, that we're expecting. Hi, Jen.
Oh, now I'm unmuted. Hello.
Alrighty, I think we will kind of get things kicked off, and I'll maybe set the ground, or set the context for, particularly for our extended panel here. Firstly, just to note, this is being recorded, so only say those things you're happy to have recorded for posterity. But obviously recorded and shared because, I mean, in some ways we're wanting to answer the questions that people maybe are a little too afraid to ask, which may mean they don't even want to show up on a panel or in a session like this. So we've had some questions submitted in advance, as well as sort of things that we've sort of through the BEAR program and through our sort of relationships with Christine and Laura and others out in the community. What are some of the issues that people are grappling with? So that's really our goal today, is to try to answer some of those questions, particularly from a sort of finance, accounting, tax perspective. So that's our role and objective here. It'll be a relatively free-form conversation, I think. My job is to try to moderate that. Claire will be sort of helping submit some of those questions through the chat box. Carl will also be monitoring for any additional questions we get coming through this process. Hi, Jake. Good to see you.
Thank you.
So we've got quite an extensive panel here, both of some of our existing BEAR program members, and just for those listening that are not familiar with that, that's the Business Emergency Assistance and Recovery Program, which was sort of launched by the University of Montana's Accelerate Montana program in partnership with the Missouri Economic Partnership as part of the Missouri Economic Recovery Task Force. And Christine has also been part of that team from the start as well, helping bring that community entrepreneur perspective to our work. We have predominantly spent the last couple of months responding to a whole range of questions that have come in from entrepreneurs, a lot of which has been CARES Act related, as well as more recently some of the state level funding that's been available through the governor's office. And Jen in particular with the Missouri SBDC, and Jordan, who works with her, have handled a lot of those requests. But we've had other questions through that as well, just in terms of how businesses are adapting and pivoting. So before we jump into things, maybe we'll do some quick round the kind of the magic boxes here, introductions. Just to introduce myself, I'm Paul Gladen. I'm Director of Accelerate Montana and the Blackstone Launchpad at the University of Montana. So I'm just going to call people out based on how you appear on my screen. So Amy.
I'm Amy, and I'm the owner of Missoula Bookkeeper, and I'm one of the panelists today.
Thank you. Laura.
I'm Laura Lee, and I'm a contract bookkeeper and staff management accountant with various small businesses and nonprofits in Missoula.
Dave.
Hi, I'm Dave Gilmer. I'm with JCCS, and I work in a public accounting firm.
Alanna.
I'm Alanna. I'm with JCCS. I'm a CBA.
Christine.
I'm Christine Littig, two-time business owner in Missoula, Redbird Restaurant and Bernice's Bakery, and currently I don't own a thing.
All right. Nick, I know you're not a panelist, but I'll let you introduce yourself anyway.
Oh, thanks. Nick Shantz, co-founded GeoFly. Now I just sling code for Yakima Chief Hops.
Nice. Carl.
Hi, Carl Interschutz. I work with Paul. I'm directing the Accelerate Montana's Rural Innovation Initiative.
Mike.
My space bar didn't work. Sorry. Mike Braun, professor at the College of Business and director of UM's corporate training program.
Jen.
Jen Stevens, I'm the regional director for the Missoula Small Business Development Center at UM.
Claire.
Hi, I am Claire Bradley. I am the student consulting coordinator at the Blackstone Launchpad.
Jake.
Jake Carter, CPA. I'm with JCCS as well as Dave and Alanna.
And I guess this isn't your official name, but the Seeley Lake Community Foundation.
Hi, I'm Claire Muller. I'm the executive director of the Seeley Lake Community Foundation.
Thanks for joining us. Carly.
Hi, I'm Carly. I work with Carla for the Accelerate Montana's Rural Innovation Initiative.
And Morgan, even though we can't see her because she's got dodgy Wi-Fi this week. But
Hi, I'm Morgan. I work in the Launchpad with Paul.
And last but not least, Sid.
Hey everyone, I also work with Morgan, Carly, and Paul.
Alrighty, so let's jump into the action here. Claire has been putting the questions into the chat, so I'm going to read them out, but we'll start with the first one. But if you're wanting to refer back, because the first question is fairly long, but pretty broad, and I think really gets to grips with some of the broad challenges that many entrepreneurs are facing right now. So the question is the new norm that businesses are expected to just deal, adjust, borrow more money, or shut our doors? So this is a pandemic. My business is being impacted by something I had no control over. Working diligently to do all the right things, but sales are down significantly. I'm scared to say that out loud, to admit failure. Is anyone thinking about next steps when the coronavirus numbers go up again, when I close my doors again, ? So that's pretty stark set of questions. I don't know if someone wants to take a first pass at how you're advising small businesses that you may be working with to deal with these kind of challenges. Anyone want to take a stab at that? Otherwise, I'm happy to start the conversation. But
I can speak for what I'm doing with my clients. The answer is yes to all those things. They all need to be considered. And I think the really impactful thing that this person is saying here is the fear of admitting failure. And I think it's really important that everybody we work with, that we, reassure them that this is out of their control, and we're all in the same boat. We're all dealing with the same reality. Some people have access to more capital than others, but in terms of the pandemic, what it's going to do in the future, we're all facing that same reality. I know that the businesses I work with, we're really working hard on projections going out 12 to 18 months and with different scenarios, like we shut down again, or we don't shut down, but we continue to see this reduction in business. So that you can kind of get some sense of security of being prepared for whatever it is that's coming, and then coming up with a game plan to deal with that.
Yep. Yeah, Laura, one of the things I sort of say with sort of projections and forecasts, you're not trying to predict the future. You're trying to understand what the future could look like. And in this kind of environment, what would you need to do to be able to survive in those environments? What are the assumptions under which your business could sustain itself and thrive?
Right, exactly.
I think to expand on the question that was there, I think the first part of it is we have this new normal and businesses are just supposed to cope or shut down. If you do a lot of reading on it, and it gets a little scary, but you run into turbulent times, and those can be disruptive, but I think it's really the things that you can do to react to that. And a lot of it is out of our control, but you really have to think where we were previously talking about different scenarios on our forecasts or budgeting. We have to look at, what situation are our suppliers going to be in, and what situation are our clients going to be in, and does that change our role? Does it change our product? Does it change our service line? And even though maybe you got in business to manufacture a certain product or whatever it is that you do, everyone's in a different situation. I think you have to ask yourself if there is a new normal, right, where things are a little bit more disconnect, where people are maybe a little bit more disconnected, like we've been the last few months. What is your product or service? How does that fit in? And if it doesn't fit in like it did before, now's a good time of looking at what are alternatives that are in the similar line of what you do that you can easily move to, but start expanding into that. And maybe your clientele isn't your clientele anymore and you're reaching new markets. So there's a lot of things to be considered. It's extremely overwhelming, understandably. And you're faced with the task, you're trying to get out of a horrible 3 months of no income and just try to get back on your feet, when I think there's good reason to think that in the fall or in the winter, we can face this again. And I think part of the planning has to be, if we are shut down again for 3 months, am I more prepared to handle that, not just financially, but my business model?
Right. I think it's great advice, Dave. I think it's very consistent with a lot of the ideas and things we've been kicking around amongst the Bear team in terms of adapting your products and services and better understanding your customers and your supply chain. Other comments?
For Missoula SBDC clients, we've done a lot of refiguring with folks on, their financial projections. People are feeling like they're back to the startup phase, and in some senses they really are, because the market conditions have changed so dramatically. But I think just taking that step to, look at the financial picture and how it is, reconsider what your expenses are, be honest about what your current revenues are, and then think about, is that enough to survive this year? If not, what adjustments can be made? And then each business owner really has to make a really personal decision about, whatever scenario is success for them. Do they want to go through that or not right now? So that's really, kind of a personal thing, but we've been helping folks kind of just get some numbers under them. It can be scary to look at, but you're much more equipped to make good decisions if you do take that step to really look at where you're at, reassess, do some of the, the pivoting and scenario pieces like Dave and Laura mentioned, and then, choose how you want to go forward. Can help people not feel like this is something happening to them, but something that they're, taking a proactive step about.
Great advice.
I was just going to add that I've been contacted by several small businesses that didn't really have good systems in place when everything started. And so part of my advice has been encouraging people, when there has been a downtime, to use that time to get their affairs in order, for lack of a better term, and have bookkeeping set up, at least starting with the beginning of 2020, and getting things into place so that they can actually pull reporting. Projections are great, but if you don't even know what your history has been and where your income streams have been coming from and what your costs are, it's really hard to project. And so with some small businesses, with starting from scratch. And so depending on where you're at, and finding that data that you can pull from. And then I have been super impressed by how innovative a lot of the small businesses in Missoula have been in shifting their business model or shifting their income streams to accommodate what's happening right now. And I think that's been a piece of my advising with clients, is looking at where their income streams are and where adjustments can be made, or where they can take advantage of opportunities that maybe they haven't thought of, because they're just stuck in that, oh my God, everything's gonna go to hell sort of place. And so, being that person to kind of offer perspective and bounce ideas off of. And so I think if you are a business owner, finding an advisor or finding people, a community, even if it's not somebody who's maybe in that role of, being a financial advisor, finding other small business owners that you can bounce ideas off of and get perspective from, I think is helpful, because when you feel like you're the only one, or you feel like you're floundering on your own, it's really hard. So.
Absolutely. I think
the challenge that I've encountered with businesses is the temporal aspect that, this is probably the first time in a long time, if ever, that businesses had to consider both very short-term and also very long-term considerations to their business. And they should, because in the short term, we're talking about sort of liquidity issues to keep funding the short-term obligations of the business. But long-term, we're talking about solvency, right? And if you're just focused on the short term, but in the long term, we've seen in all the recessions that markets will change because consumer behaviors will change. If you're not aware of how consumer preferences are migrating, you might just be left out in the cold. So I think it's very important for businesses to think through all those different sort of layers of time, right? What is it that I do in the short term and medium term, and then what can I expect in the long term? And to Dave's point before, this is long term, where you get back to the business model to say, well, if the market changes on me, so will my business model a lot of times.
Yep. This is really just an intensification of what happens kind of over many, many years normally, right? I mean, this initial question here around sort of the pandemic isn't something that they had control over. Neither is new technology entering your market or new regulations or consumer and behavioral changes. These kind of things happen to lots of businesses. We can look at the many, many great brands of years gone by that are no longer in existence because their businesses or their business models weren't able to adapt. So that is, I mean, this is a brutal and very dramatic and rapid shift in the business environment, but it's something that can happen to many, many businesses. And it is essentially, that's the challenge for the entrepreneur is, can you make that shift? And to Jen's point as well, do you want to make that shift?
Well,
Can I ask that?
We're talking about, oh, sorry, Paul.
No, go ahead.
About change and adapting for small businesses. There are different times where, or at all times, you're changing and adapting. But I think what I'm reading in this question a little bit is that feeling of the longevity of the crisis, where a lot of times over the course of a business, I think about Bernice's when the commodities market went up 300% and 11% of bakeries across America just shut their doors. But it was a short-lived moment of, this is how I need to manage this crisis. These are decisions we're going to make. Here's how we are not going to close our doors. And I'm wondering if for some people it feels longer than what an immediate change or even an innovative change brings to mind for a small business, and probably still does come back to where we started, which is their own financial literacy and whether or not they're used to thinking in short-term or long-term capacity.
Can I ask the sort of the elephant in the room question, which in some ways is, when and how do you make that decision that you are better off to shut your doors than to stay open? I don't know, Dave, Alanna, Amy, Laura, have you seen businesses that have made those decisions, not necessarily in this environment, but in previous times? What's triggered them to come to that conclusion that it is the sort of...
I think it speaks to what Jen was saying, that, you know, the way in which they would have to change makes it unappealing for them to conduct that business anymore. They're just not interested in doing it. I don't have any current clients that are facing that right now. So all very fortunate. But I would say that I wanted to speak a little bit to, you know, this, I get the impression from this person that they're feeling a little alone in trying to deal with this crisis. And, you know, I keep coming back to this. I'm scared to say that out loud and I don't want to admit failure. And one of the things that I have seen is really critical during this pandemic is all my clients who have relationships with local banks have gotten a ton of support from them. And so I would encourage all the micropreneurs and all the small business owners in Missoula, if they're not already, to switch your banking to a small local bank and start developing that relationship. And you can get a lot of advice and a lot of help for free, basically, just because you have that relationship with them. I think some people are afraid to deal with their banker. You know, when talking about admitting failure, you might really be afraid to do that when you're dealing with your banker. But, you know, the local banks have really been there to try and, you know, help the local economy going and have been super supportive. So.
Yep. Well, in addition, I mean, I think it's great advice on the banks. I think in addition to that, I mean, that BEAR program, and sort of many of the folks on this call, Jen, Mike, Carl, myself, Morgan, we're always happy to talk to entrepreneurs about where they're at in that process. And that there's no sort of, we meet entrepreneurs wherever they are. We're not setting any particular expectations kind of with them. So we're happy to explore that. And actually Mike is, sorry, Christine, just to say, Mike and actually Christine and I have been working with Laura's help as well on putting a little bit of a financial model together that we're hoping to kind of roll out in the next few days that can help entrepreneurs really sort of take a look at the basics of their financials to understand what are those conditions for success that would need to exist for them to feel they can sustain it. And then Laura, to your point, Jen's point, make that decision about whether that's a future they want to kind of push towards. Sorry, Christine.
No, I was just thinking that as I was listening to Laura talk and circling back to networking or collaboration or finding a place to bounce ideas off of other people, I think a lot of times, and especially when we're talking about micropreneurs, they tend to be pretty independent. And so it's sort of a need to maybe even bust through a little bit of their own personal barrier to start working in group settings and collaborating versus that independent model.
Yep. And there are a number of sort of peer sort of entrepreneur groups that meet regularly. And I think if people are interested in pursuing that, we're more than happy to try to connect them or help them explore putting those kind of groups together as well. Because I totally agree. I was one of the co-founders of the Hellgate Venture Network, and that's what we found. People turned up to that because they wanted to find other people that were as crazy as they were. So, and to drink beer, but anything else people want to sort of say in relation to this sort of this overarching kind of how do I sustain myself or push forward in this environment, or do we want to move on to some of the other questions here?
I'd be curious just to hear from other people on the panel what everybody's thinking is about what's going to happen in the fall.
Yeah.
And I know nobody knows, but just wondering just kind of what your take is on it. Are we going to go back to a shutdown?
I was talking with one of the restaurant owners downtown last week, and I think that even if we don't shut down in the fall, there's going to be this kind of long brewing effect over the summer as the tourism does or doesn't happen or comes in different ways. That's going to affect some of these businesses that will probably start to see more effects in the fall, just based on talking to folks that have been able to weather this spring, but really aren't sure how the changes in the economy and the tourism and some, there's no concerts this summer. There's all these things that bring people into certain areas and certain businesses that just aren't happening. And how will that, the fall may be when we actually start to see repercussions of some of these things that really aren't even related to another shutdown in the fall.
One of the things that I'm interested in watching is how the housing market in Missoula changes as rent deferments and mortgage deferments start to expire, and folks are suddenly surprised with the last 3 or 4 months of housing costs, and how that'll impact the economy and housing prices in Missoula.
Nick, to that point, I think there's something to watch there with commercial, not just residential real estate pieces.
But even on the residential, Nick, I mean, literally having just sold my house a week ago, and what I'm hearing from realtors is the market's still really strong. And the interesting thing is we have our local economic conditions, but then we're also seeing, I think, this move of people, right, who want to get out of the cities and move away from the big urban areas. So to what extent that one sustains real estate, but what impact does that have on those folks and those, presumably if those people are in a position to move, maybe they still have good paying jobs and are able to move remotely, and they're going to bring new money into the economy. So it could play in a number of different interesting ways. And obviously that varies significantly, right, where you're at in the income and kind of wealth spectrum.
Yeah. It'll be interesting to see like how it impacts those folks that work retail, and or we just get to see sort of a shuffling of renters across Missoula when they can't pay the last landlord, and how that
right. Well, that's actually part of the sort of the model that kind of Mike and Christine and Laura and I have been sort of working, is to look at sort of how does the impact of the sort of front end commercial operation that's leasing or renting real estate from somebody else that essentially has a business as a real estate owner, even if they're doing other things. And then how does that step back to the relationship with the bank? And obviously the nature of those relationships depend on how acute the pain is, how acute or not the kind of the level of debt or kind of mortgage kind of on those businesses or on the property are. So we're just trying to sort of help people think through what you can do in your business may also be impacted by the other people that are part of your sort of both your customers, but also the people that sit behind you, whether that's your landlord or the bank, in terms of what's their willingness and capacity to accommodate shifts that may be needed to sustain your business. Because is a bank going to foreclose on a business? Because who's the next business that's going to move into that who's going to buy that building, or if the landlord kicks a tenant out, who's the next tenant coming in? These are all questions with difficult to know answers.
Well, going back to an earlier question about what's going to happen this fall, granted, nobody knows, but I'm definitely talking with all of my clients to plan and be prepared for it. If you're prepared and it doesn't happen, you know, great. But even if it doesn't happen, I think for the midterm, you know, maybe the next 2 years, I really feel that we're going to see a difference in people's actions. And so, you know, if we're talking Montana and small retailers, the way people are doing their shopping is starting to change. And I think they need to do everything they can to jump in front of that and start offering a different business model, you know, not get overshadowed by things like Amazon, and find new ways, first to advertise, second to line up customers with their product. You know, whether they're doing weekly videos or delivering their products or whatever it is. But I think there's going to be a change in behavior, even if we don't shut down again. And I think they need to be prepared, and that's what we're talking about.
Absolutely. Yeah. At least we have now some insight that this can happen and what it looks like, and at least some of the options to adapt. So as you say, businesses can be a little more prepared this time around than clearly anyone expected to be this more recently. And actually, just on that point, just to mention that through the CARES Act, we're expecting some funding flowing down both to the Missoula SBDC program with Jen and also through our ADA program that Carl and Carly work on. And we're anticipating using a significant amount of those funds to help develop sort of training resources that will help businesses move a lot of their activities into that sort of online digital environment, because we certainly see that as a trend and an opportunity that businesses need to continue to focus on if they're going to sustain themselves through this kind of an environment. So let's switch gears here, and this is partly to the comment you made a short while ago, Amy, about sort of businesses having some of their sort of financial ducks in a row, and that's certainly a theme that sort of Christine and Jen and I talked about on our sort of bear calls, is sort of financial literacy. And I think certainly Jen and I, both in the Launchpad and with the SBDC, have often seen these sort of small entrepreneurs that really don't have a strong grasp on the financial drivers of their business. So sort of as long as the bank account is got something in it, then things must be going okay. So we really want to talk a little bit about what does it take to have good financial information. So sort of Amy, Laura, Dave, Alanna, would really welcome your input and perspectives on what you see when kind of small businesses are managing their finances well. And then we've got some related questions here around sort of free online accounting and free tax help. And there are some other questions we've had about particularly sort of small businesses that may not be as up to date as they should be with some of their tax affairs. So we'd just like to have a sort of a discussion around what does good sort of financial management, including taxes, look like in a small business, and what advice you have to businesses to really make sure they're equipped to have the financial information that can help them make these kind of decisions that we've been talking about in the first part of our conversation. So I don't know if Amy, you may want to, given you sort of raised that topic a few minutes ago, what are some of the best practices, as it were, that you try to help your clients get in place?
Sure. So when I'm talking with somebody who, and these are really small businesses, these are, you know, single person, maybe one or two small employees. You know, a lot of times, like you said, they're just, if the money is in the bank account, we're going to assume we're going to be okay. And so as a first step, you know, trying to get people to separate business and personal finances. A lot of times, if it's a single person shop, they're just running everything through one account, and it's really hard to manage and pull out the right transactions for taxes and stuff. So that's always my first recommendation to people if they haven't done that. And then once they've done that, getting it, I talk with people about a system is useless if you're not going to use it. And so you have to find the system that works for you. And so if hand entering things into a spreadsheet is way too time consuming, don't start with that model. Start with whatever works for you. If you're always on your phone or on your computer, then use an app that you can access from anywhere. And for my really small businesses, I recommend a free software called Wave Accounting. It has some costs if you start doing payment processing or payroll through it, but if you're just using it for accounting, it's free, and it pulls in bank feeds from your bank account and your credit cards and different things. And it's a pretty user-friendly interface for going ahead and classifying transactions, and then you can pull a profit and loss and balance statements and basic reporting that is mostly what small businesses would need for their uses. If people want to do QuickBooks because they feel good about going with something that's more of a known entity, I actually encourage them to stay away from QuickBooks Self-Employed because the platform is really janky, I feel like, and it's also, if you ever decide to upgrade to QuickBooks, it doesn't upgrade really cleanly. You have to kind of cut it off and then start anew with the next version of QuickBooks. So I try and tell people either go with QuickBooks Online, the basic, I can't remember what it's called. It's the next step above Self-Employed. I think it's called Essentials. And there is a monthly cost to that, or to go with the Wave. And I try and tell people, even if you don't want to pay for a bookkeeper to do your bookkeeping, having somebody that you can, check in with once a quarter and say, hey, will you just look at this and tell me if there's anything that looks weird, or how do I handle this loan that I just got? How do I create an account for that? Or just having somebody that you can pay hourly or whatever to give you a little bit of advice, even if you're not willing to do a full investment, because if you don't do things well, you're going to end up paying way more in taxes or messing something up and having an audit or whatever might happen. So I think just getting a system in place that works. And then with receipts, again, I tell people use the system that works the best for you. If stuffing everything in an envelope for the year 2020 works for you, then do that. If you want to scan things in and put them in a shared folder or scan them to your software that you use for accounting, do that. But don't try and force yourself to use a system that you're not going to use, because then you're spinning your wheels a little bit. So those are kind of my basic startup things that I work with clients on.
Great. But those are good. Those are kind of things we talk about on a regular basis. Sorry, go ahead.
No, I was just gonna say, I think too, for clients, it seems like a huge mountain to conquer when they haven't done accounting so far. Mm-hmm. When there's a lot of cheaper apps online like QuickBooks Online or FreshBooks that do connect to your bank account and create a relatively seamless, quick process. It does take some training on the front end, but there's a lot of help online through Google and YouTube. And it seems like once they get things connected and realize, it's just going to take like 5 to 10 minutes per day of coding transactions, and they've already got their books going, it seems like they start to feel more comfortable. I also have some clients that take the straight bank information online, download to Excel, and just start coding off of that if they want to do a free process. But like I said, I think there's a lot of really free or cheaper web programs like QBO that make it easy for clients to start and then keep up on it.
And I would just editorialize here. So the bookkeepers and the CPAs and accountants don't have to promote their own services. I will strongly encourage any entrepreneur to get professional help with these kind of things. They should focus their time and energy on their business, their customers, their products and their services, and the people that work in their business, and have the professionals kind of help them do these things. Even to your point, Amy, that they may do some of that, but then having someone kind of check that what they're doing and the information they're getting is actually sort of reliable and therefore a good basis for decision making. I've seen way too many, and I'm actually a qualified accountant, UK accountant by professional training, and I don't want to touch kind of QuickBooks. I'm going to let somebody else do that work and kind of make that information quick and easy, because you're going to do it in a fraction of the time it's going to take me to do it when I'm only spending 2 hours a month on it, and you're spending many hours each month for many years knowing your way around these tools and around the information and as it relates to tax. So I would strongly advocate that it's a smart investment, even for very small businesses, to invest in that little bit of professional expertise and help.
That's a good segue, Paul. We've got 4 more questions, very nuts and bolts questions. So maybe we take the opportunity.
Yeah.
So the first one is, what are the requirements for new businesses to file taxes that haven't filed taxes before and may have been operating for a year or 2?
You can see why some of these questions were anonymous, right?
I'll just jump in here. For federal purposes, if you are, an LLC or a corporation, if you have any kind of revenue, any kind of expenses, you're supposed to be filing a return. So and when you say in operations or operating, I take it to mean that. So you're late in your filing. And more likely than not, the IRS is going to find out and they're going to send you a nasty gram, not only wanting a return, but penalizing you heavily. If you had no activity, literally like no revenue, no expenses, some states still require you to file a form indicating that you had no activity for that year. So my best advice is that if you haven't done any filing, that you should do it as soon as you can. Granted, if they want to penalize you, that's going to make it happen sooner rather than later. But if you're a new business, you can get out of those penalties sometimes with your first time abatement and clear that up. But it's best, you're definitely better off taking care of that, catching up, and not just, hoping that it will go unnoticed, because more than likely it won't.
Dave, just to follow up, did you say that that advice applies to sole proprietorships as well?
Yeah, I would say that. A sole proprietorship is going to be reported on your personal return. So if you have any income or expenses to report, you should be doing it on there. A lot of times, though, it does depend on whether people are reporting like 1099s to you, or if there's something to trigger the IRS that, hey, you should have some income. With a sole proprietor, you're not necessarily on their radar already. An LLC or an S corporation or whatever would be. So there may be zero activity on an entity like that triggers a letter from the IRS. A sole proprietor may not automatically trigger unless they do somehow know that you received 1099s for revenue.
Dave, could you just talk briefly in terms of the penalties and so forth? How do they sort of get calculated? What sort of quantum might they be for the sort of micropreneur type businesses we're talking about here?
Yeah, if you're talking like a partnership or an LLC, they can add up quickly. I had a client send me a letter, didn't realize that he had a business going, and sent me this letter, and there was only him and one other guy, and the penalty was like $3,000 or $4,000 because it had been multiple years, and they penalized based upon the number of owners in that situation. And then, when there's penalties, then they decide when is the appropriate date for that penalty, and then start charging you interest for payment on those. So it's going to vary significantly depending on each individual situation. But again, the longer you wait, the worse it is. And I always refer to the IRS as like a train. If you can jump on board or do something to stop them when they just start getting going, you have a chance. But if you ignore it and start getting notices and ignore those, the train's picking up speed and nothing's going to happen except getting run over. So again, despite the desire not to pay taxes or get penalized, the sooner you deal with it, the less painful it will be.
Dave, does that apply for businesses that also operate at a loss in the first couple of years? Can they still have penalties from the IRS for not filing?
Yes, they can. When you try to get out of those penalties, you can try to use that argument that there was, negative income and there was no harm by not filing. However, I would say you're hurting yourself at that point. If you have a business that had losses and you're not filing, you're never going to get benefit of those losses to offset other income. So again, another reason why you would want to go back and do those filings.
Maybe we can also get to the question 8 on the chat there about if I file my taxes and I wind up owing money. So, which really is sort of almost a budgeting and planning question, right? How do you project for the fact that you're likely to owe taxes if you're profitable? What's good best practice for businesses to handle that? It's open to anyone.
Yeah, that's a good one. It's almost like any of your other expenses. How do you best want to pay for it? You can pay for a lot of your taxes using credit cards. Of course, if you're not able to pay your credit card off immediately, that's a high interest rate. But you can pay on credit card. You can look at other sources of loans that you have already available. I'm assuming these people don't have maybe the cash to pay on their own. And of course, you can just make payments on your taxes. So if you owe, $1,000 to the IRS and they send you a letter, you can go through a process of formally getting on a payment plan, or as long as you send them enough every month that it would be paid off, maybe within a year, they'll just keep sending you a monthly notice. But again, they charge interest. So it's just a matter of who charges the least interest and who would you rather get monthly letters from, a bank or the IRS. So.
Excellent.
So let's shift gears a little bit, come back up to question 5. This maybe goes to systems in place and best practices. The question is, how can a business balance time constraints when there are extra childcare responsibilities on top of not already having an organized system for tracking receipts? Anybody want that one?
I can hit on that a little bit. I have 2 kids who were home doing school this last 4 months. I think the biggest thing I try and encourage people to do is automate stuff as much as possible using your apps or software that will pull things in or run things through in ways that you don't have to touch every piece of it. And again, like with receipts, if you're having systems in place that your transactions are coming in and you're not hand entering things, then the receipts can kind of just go in a file and they're there for an audit, or if you need a receipt to return something or do backup, check in on expenses you had or different things. And so for me, it's creating systems that keep everything flowing and using good calendaring systems to remind yourself when you have deadlines or payments are due on different bills, auto paying as much as possible. I try and encourage clients not to have to write checks for things. 1, because they forget, and 2, because it takes me more time to figure out what those checks were for. I actually have to get into the account rather than seeing a charge to Verizon come through on a card or as an auto pay ACH or whatever. So just trying to automate your systems as much as possible is something I work with my clients on a lot.
I'll follow up by saying that what Amy referenced is maybe how an entrepreneur might look at a month or a week even, but I think it's important to, in this situation when someone is dealing with childcare, and it's another one of those new elements that's come in this pandemic, that really thinking that same piece of, oh, I'm starting all over again. And what did it look like when I first had my business? Well, I had these lists every day. At 8 o'clock, I do this. At 8:30, I do this. And one of the things that I've heard from individuals who have kids is, I set aside X time every day, and here's where I spend time with my children. I don't feel guilty. I feel like I am interacting with them, whether it's school or play, and then say, okay, as a parent, I'm going to go back and work in my closed door space for 2 hours. Here's what I'm hoping you guys will do, or you're playing with so-and-so. But keeping even that daily structure and routine helps establish then those longer routines.
I was just going to mention there's also a cell phone app, or quite a few, that when you scan in the receipts, it actually classifies against income, expenses. It reads what's on the receipt through the OCR. So for smaller businesses, that's really great too, to get a jump start. And they already have their cell phone out, just start coding receipts. And it gives them a huge head start in not only saving receipts, but then also having their financials ready to go.
Is there a particular app or a couple of apps that Alanna you'd recommend?
One that we use is Receipt Bank. I can't remember, it's a self-employed receipt bank, but they've been really great. I think it might be $5 to $10 per month, but that's a really great one. I know there's some other ones. QBO doesn't necessarily OCR off of the receipt, but you can also snap pictures of the receipt and save them in QBO. But I know there's got to be some others that actually code off of the receipts or your income invoices.
And just encouraging, again, entrepreneurs, particularly when in relation to this question, sort of balancing time, really placing value on your own time, right? So do I want to spend $5 to $10? Well, how much are you wanting to pay yourself per hour for being an entrepreneur, right? If you want to pay yourself more than minimum wage, you're going to save yourself an hour by having this app in place to get this stuff done kind of quickly and efficiently. So it's really important to do those kind of calculations. We're going to jump to question 6, Carl.
I'm going to go to question 6. I was just going to say, maybe if folks are willing to share sort of your apps that you've used, maybe we can compile a list on the Bear website and just make that available to people so we can click on them and check them out. So question 6 is, if two businesses are operating under one EIN, do they file taxes separately, once for each business, or jointly?
Well, it sounds like technically they only have one entity, just maybe 2 lines of business. So you're only going to have one tax return in that situation.
However, we would certainly advise from a Launchpad perspective, depending on the nature of those businesses, you may well want to be looking at separating them into separate legal entities so that the success or failure of one business does not drag down the other business. So, but obviously then there are costs because now potentially you're got to manage 2 separate legal entities and 2 separate tax returns.
Question 7, what expenses can be itemized for a business?
You can answer that in the next 11 minutes. That'll be a
short answer.
I have a PDF that I give to new businesses that kind of has the basics of here's what you can write off, because that's a question that people have all the time, and people are really unclear. Things that they think that they can write off, like new dress shoes from Ross or whatever, are not necessarily in that list, but then things that they wouldn't think about are in the list, and when they realize that, they're able to pull in some new expenses. So,
including deductions for things they didn't necessarily really spend money on, right? So.
Yeah.
So do any of those apps that code, are they able to make some of those calls? Do they help out, like sort of help them understand what they can and cannot in those apps?
That's a good question. That's usually up to the person doing the scanning of the receipts to know what was purchased, because the OCR is taking more of like the vendor, date, and amount, and kind of based on the vendor or items purchased, it classifies it. So if it sees like clothing, it may wonder if it's like safety clothes or branded uniforms. So some of that stuff is up to the discretion of the person using the app to correctly know if it can be deducted, or ask someone who would know.
I normally tell my clients, so first off, don't ever think maybe an expense is not deductible. So definitely just get it documented somehow. Chances are, and I say that kind of loosely, chances are there's probably a certain aspect of it. Obviously, 100% directly related business items, even though you might not have an expense account, I mean, you can find a home for it, we'll make a new account. And so I say don't underestimate it. But then kind of as Amy had pointed out, and maybe Alanna touched on it too, there are some items that you would just kind of inherently think, well, this is for business, so it must be deductible. The IRS just has, as we all know, there's somewhere in the code that says yes or no. or alludes to it as being a maybe. And then that's when you really need to kind of lean on someone to really steer you in the right way. And then, don't forget about like home, a lot of people, home office deductions and stuff like that, where you have that mixed use. It's good to just, again, whenever you think you incur something or feel like there's a business component to it, at the very least, just somehow document it. And then we can kind of decide on it later. And then to kind of answer Carl's question that you just kind of posed, I think you're at the mercy of the person inputting the data. And then, if you're putting it in, something like let's say a meal or something, did you put it in because you were traveling, so it'd go into a travel expense, or did you put it in the meals expense, which, as we probably all know, meals are kind of always under scrutiny as well as entertainment, so now we're going down the rabbit hole. So hopefully that kind of is my experience and what I tell my clients.
I think too, it's also important that you want to start tracking your business mileage. And as we talk about apps, there's a lot of free apps out there, or ones that are cheaper, $2 or $3 per month. MyLIQ is a really good one, where you can actually swipe left or right based on what's business mileage, so that you can track during the year and then use that come tax time.
Very cool.
That's great. So we have one more question. Want to do with 8 minutes?
Mm-hmm.
This is the PPP question. I'd like to use the PPP, but I'm afraid of it turning into a loan if I apply, as I don't want to take on debt. Should I apply before June 30th? So maybe in that question, some concern about what the forgiveness application criteria are, and then consider taking on the debt.
I will attempt to field that one. So that I think we got to dive deeper in on that one. So I would say, just kind of in a general sense, I'm assuming you qualify to apply for the PPP. So I'm assuming there's some sort of uncertainty, as they say, on the application for your business. That's kind of a good qualifier, just in general, if you should be going down this path of applying. Otherwise, you're going down a path you shouldn't be, and it's going to just cost you resources and time. So assuming you need the PPP and you can qualify, I in general would say that the way that they're starting to yet again adjust and amend some of these rules, they are really making it pro-business in terms of being able to qualify for forgiveness. And so if you, and this is where we can really start kind of going in different directions, because we might be addressing a lot of entrepreneurs who have no history. And the PPP is not friendly to that. They're always looking at, what did you do last year? And a lot of our new startups are like, well, I didn't have any activity. And so you're kind of stuck. And so that would be the one kind of qualifier for some people listening here, is that we need to first see what you can get. And then at that point, as long as if you secure the funds, you obviously have shown a track record of making money, earning money, or paying employees. And so I would say if you are continuing that or attempting to continue that, you're more than likely going to qualify for some level of forgiveness. And whatever you don't qualify, if you're managing your funds appropriately with the PPP money, and maybe don't go and spend it all on something else other than what we can get it forgiven for, but really isolate that in your account or set up a new account. A lot of bankers are doing that to help people be accountable with that money. Whatever you don't spend on payroll, which for some of our self-employed clients is just simply a matter of drawing the money out. That's a whole topic. So payrolls, which includes yourself, rent, utilities, some mortgage debt interest. If you're spending money on that stuff, that's going into your pool of forgiveness. And so chances are you will have it forgiven. Whatever you don't spend, send it back. And then you don't have that loan. That was my short version.
I will just add that if you don't have a relationship with an accountant or a bookkeeper that can kind of help you navigate that, somebody earlier talked about the local banks and how on it they've been with these different options that are available. And I would reach out to a banker because they have been super helpful in navigating that process and advising people on what they can and can't do. Yeah, I've been super impressed with the bankers themselves. So if you don't have a relationship with someone already, that local bank is going to be able to help you figure out what you can qualify for and what you can actually document.
I'll make one more comment as it kind of hit me to the person, the author of that question. They are spot on in terms of that it is a loan. So the moment you get that money, in theory, the clock is ticking. And theoretically, when you go through this process of loan forgiveness and you get X amount or X percent forgiven, that portion of the loan of the interest you've accrued during that time is forgiven as well. So if you were able to apply for 100% forgiveness and get it, no interest will be due. So that's also forgiven. So to this person's point, should I get it and then maybe wait to see if I can have it utilized or not? In theory, if you send it back, there will be an interest component, but it's really low. It's 1% annualized. So you kind of have to kind of weigh that. Do I want to pay maybe the couple $100? I don't know if it'd be that much. That's quite a bit. I think it's going to be pretty cheap. So if you're willing to float the $50 to $100 or whatever it is in that coin flip of a chance, you think it'll work for you and you can have forgiveness, then that I think is, to their point, kind of the risk that they would be taking on. And they're very aware of the June 30 deadline. A lot of people don't know that. And for all those who are watching who don't, if PPP is not in your acronym list of knowing what that is, you need to figure that one out, because that has just been a business saving grace for 95% of my clients. The other 5% are in construction.
Awesome. Well, we're coming pretty much to the top of the hour. So first, I want to thank all of our panelists for coming along today and sharing your insights and expertise. I think this is some of this is down in the weeds and in the details, but it's critically important stuff. And I think some of the advice offered and kind of suggestions for using apps and other things here, I think there's some really valuable advice here. So for those that may be watching this as a recording, our plan is to do these weekly as long as we have questions coming in. So if this has prompted other questions that you have, you can just go to our website, umt.edu/bear. You should be able to navigate from there to our kind of Q&A form, an anonymous form, as well as if you do have more specific questions that you want a more individualized response, our regular Bear program, you can submit a question with contact details and someone from the Bear team will get back to you, including questions around PPP. And sometimes that may then involve us referring those folks out to some of the kinds of kind of professional experts that we've got joining us today. So thanks again to everyone. Maybe some of you will want to come back and join us next week. So we may have another panel of folks joining us then. But for now, thank you all and stay safe and appreciate your time.
Thanks.
Thank you.
Thank you.
Thank you.
Thank you.